The story of the United States and Canada has always been a story of proximity, of neighbors tied by history, geography, and shared culture. The longest undefended border in the world separates them, yet in truth, it does not separate at all. It connects. Goods flow north and south across it every day. Cars, oil, wheat, lumber, steel, electronics, ideas, and people. For decades, trade between the two nations has been celebrated as one of the strongest economic relationships in the modern world. But in the summer of 2025, the headlines carried a different tone. America's trade deficit with Canada had climbed to a record high, sparking fierce debate in Washington and echoing anxieties from Wall Street to Main Street. The news came quietly at first, a government report released by the Commerce Department late one morning. But the number printed there, billions of dollars in red ink, was impossible to ignore. The United States had imported far more from Canada than it had exported, and the gap was widening. For economists, this was not entirely surprising. Energy prices had been volatile, and American demand for Canadian oil and minerals had surged. Lumber shipments, too, had soared as U.S. housing demand stayed strong. Yet when the figure was revealed, it struck like a thunderclap, feeding into a narrative of vulnerability and imbalance that had already been growing louder in the halls of power. In Washington, the deficit quickly became more than a number. It became a symbol. The president's advisors huddled in back rooms, calculating the political fallout. Senators took to the airwaves, some blaming Canadian subsidies, others pointing fingers at American overconsumption. A few insisted that deficits were nothing to fear, that they simply reflected consumer choice and economic interdependence. But the louder voices warned of danger, a hollowing out of American industries, a growing dependence on foreign energy, and an economic partnership tilting too far in Canada's favor. For ordinary Americans, the issue was more complicated. Many did not follow trade statistics, but they felt the consequences in their daily lives. At the gas pump, where Canadian crude helped determine the price of fuel. At the grocery store, where beef, wheat, and packaged foods bore labels from the north. And in construction, where lumber shortages or surpluses rippled into the cost of building a home. Canada was not some distant supplier, it was a neighbor whose economic pulse was tied to America's heartbeat. Yet when headlines screamed of record deficits, fear began to creep in. Was the U.S. being taken advantage of? Was it losing ground in a global race it once dominated? The Canadian side of the story, however, looked very different. In Ottawa, officials pointed out that the U.S. was still Canada's largest customer, still its most important partner by far. They noted that trade imbalances fluctuated year to year depending on oil prices, demand cycles, and the strength of the U.S. dollar. To them, the deficit was not evidence of exploitation, but of success, a sign that Canadian industries were thriving because Americans trusted and bought their goods. Prime Ministerial spokespeople stressed cooperation, not competition. Yet even in Canada, some voices warned against over-reliance on a single market, urging diversification toward Europe and Asia. The clash of perspectives fed into the story, making it more than an economic report. It became a political drama. Cable news networks seized on the deficit as proof of larger truths they wanted to tell. For conservative pundits, it was evidence that America's leaders were weak negotiators, allowing neighbors and allies to outmaneuver them. For progressives, it was a symptom of structural economic issues, underinvestment in U.S. manufacturing, inequality at home, and the endless hunger for cheap imports. Economists were called onto panels to explain the numbers, but often their careful analysis was drowned out by the louder, more emotional framing of loss and imbalance. The White House, caught in the storm, began considering responses. Options were floated: new tariffs on Canadian lumber, stricter quotas on dairy imports, renegotiation of energy contracts. But each carried risks. Canada was not just a supplier, it was a partner in countless industries, from aerospace to tech to defense. Retaliating against Canada could backfire, raising costs for American consumers and provoking countermeasures. The memory of past trade wars lingered, reminding policymakers that every action carried unintended consequences. Yet doing nothing, politically, was impossible. The deficit was now a talking point, and talking points demanded action. Behind closed doors, negotiators tried to find middle ground. Meetings stretched late into the night, with trade representatives arguing over subsidies, regulatory standards, and fair market access. American officials pushed hard for concessions, while Canadian counterparts defended their industries fiercely. Each side leaked selective details to the press, shaping narratives of strength and resolve. The public saw only fragments, but the tension was palpable, like a chess match where every move risked setting off a larger conflict. Meanwhile, businesses on both sides of the border watched nervously. Auto manufacturers, dependent on cross-border supply chains, worried about disruptions. Farmers feared tariffs that could cut off key markets. Energy companies calculated the fallout if oil pipelines became pawns in political games. For them, the relationship between the U.S. and Canada was not abstract. It was the difference between profit and loss, stability and uncertainty. As summer turned to fall, the trade deficit story refused to fade. It became part of campaign speeches, part of dinner table debates, part of a larger question about America's place in the world. Was the U.S. still the dominant economic power, or was it increasingly reliant on others to sustain its way of life? Could it demand better terms from its neighbors, or was interdependence the new reality of the 21st century? The deficit with Canada became a mirror, reflecting not just economic imbalance, but deeper anxieties about power, security, and identity. And yet, even in the midst of political turmoil, the trucks kept rolling. Every day, thousands of them crossed bridges and highways from Detroit to Windsor, from Buffalo to Fort Erie, from Blaine to Surrey. Cargo ships moved across the Great Lakes, trains rumbled across the prairies, planes carried goods overhead. The reality of U.S.-Canada trade was not one of walls and ruptures, but of connection and flow. The deficit, though real, was only one measure of that vast exchange. Beneath the headlines and rhetoric, life went on, economies intertwined, and neighbors dependent on one another in ways that could not be undone. The story of the record-high trade deficit, then, is not just the story of numbers in a government report. It is the story of perception and politics, of how statistics become symbols, and how symbols shape nations' choices. It is the story of two countries bound together by history and geography, yet occasionally pulled apart by the very closeness that defines them. It is a reminder that in the modern world, trade is never merely about goods, it is about power, pride, and the fragile balance of cooperation. And as the debate continues, one truth remains. The future of the United States and Canada will be written not in isolation, but together, across the border that both divides and unites.